Good morning and happy Monday. Brian Manning here. I'm going to do 2 update videos this week. I've been out of the office and I haven't done my Friday updates for the last couple weeks. And this is a really important week based on news that's coming out. So let's get right to it. And I will do another one on Friday, giving you an update there as well. So going into the opening of the markets today, stocks are down in the pre-markets and just still a lot of nervousness out there in the marketplace. Also a really big week because it's jobs week. So Wednesday of this week, we get the ADP jobs report. So that tells us how employment adding an addition of new jobs went for the month of January. Friday of this week, we get the BLS, which is the Bureau of Labor Statistics. And that's the government telling us how jobs were added for the month of January as well. This will change a little bit, but both ADP and the BLS are looking to see about 190,000 new jobs added in the month of January. So always market movers. We'll have to wait and see what happens. I'll give you an update there on Friday as well. Also today got personal income. Personal income is up 0.3%. So that's good to see and certainly welcoming news. We've got personal spending as well. Personal spending is unchanged, and that's kind of like a double-edged sword. Unchanged is good because we're not seeing a lot of pressure on inflation, but we're also not seeing the growth in the economy there as well. In addition, we get some inflationary data today as well. So there's 2 reports that we really look at. Right now, what we got today is what's called the PCE, and this is the Federal Reserve's favorite report to get looked at in judging how inflation is doing. We don't agree. We think that they're absolutely wrong by doing this, but let's talk about it. So PCE right now is at 1.4% growth year over year. Why we don't think that PCE is what the Federal Reserve should be looking at is because the PCE does not take into account out-of-pocket cost for us as consumers for medical expenses and housing. And sure, it would be great for none of us to be spending any money on housing and certainly maybe living in a tent and also not spending money on medical, but that's not the way it goes. So we don't really agree with that. If we look at the CPI, which is another gauge of inflation, which is what we look at, the core rate of CPI, which strips out airplane sales, is at 2.1%. So certainly CPI above the Fed's target, PCE below the Fed's target. Who knows why they do this? Maybe they do this so they can kind of leave it open for future rate increases and not having to increase so fast. I really don't know, but again, it's not something we agree with. So we will be watching the markets throughout the week. Very big news week again, looking at the employment reports. We'll wait and see what happens. Our suggestion for right now is if you or a client are considering locking in interest rate floating, stock markets being down, S&P not being able to break above a ceiling of support last Friday and probably opening in the down right now, I say we hang tight, see what happens with rates because they may consider a move into a favorable position. I'm around all week. If you have any questions, please give me a call. We'd certainly love to be part of your business and pre-approve any clients you have. Have a great Monday.